Eric Muathe, Muathe.com, with part 1 of this weekend's market analysis video for the weekend of June 10th and June 11th, 2017. Let's take a look at markets here. And of course, let's begin with the Nasdaq, which was down about 1.8%. Now, keep in mind, we've had similar days like this. For example, there was a down day here that pretty much led to nothing. After that, there was another down day here, and the market would eventually go on to recover almost immediately. And there was also 2 down days somewhere here that ultimately the market was able to recover and go back to new highs. In fact, there's even another down day somewhere here. So we've seen this type of action. I'm not saying that the market cannot drop, but what I'm saying is it needs more evidence. On the Nasdaq daily, for example, we haven't even come close to touching an upward sloping 50-day moving average. So if the bears want to break this market, they're going to need to do much more than the 1.8% drop on Friday. Also, you can see that on the daily RSI for the Nasdaq, until we break such simple lines as the RSI lows line, this market continues to be, I guess, open to new highs and stability. So we have to break this line, for example, and we also have to start breaking below the 50-day moving average before we can get a major beginning of a major downtrend. In fact, if you take a look at the Nasdaq weekly, we continue trading above the 8-week moving average, and of course we are above the 13-week moving average. That's a good to stable market. We see that the Nasdaq continues to stay above 69.1 on its weekly RSI. In fact, it's been staying above and holding above 69.1 over the last couple of weeks, going back to late April. So let's call it about over the last 7 weeks or so. So as long as the Nasdaq is holding above 69.1, that's a stable to bullish market. Now, something else that we should not forget here is the Nasdaq broke out, the last legit breakout after a couple of weeks of sideways action. You have to go back to this breakout here, and the market is way above that breakout. So the breakout continues to be intact. In other words, it's a healthy pullback as of right now, and that buy point was at 5911.74. We cleared that resistance and just took off. So this pullback pretty much is within the construct of a healthy pullback, based on the fact that the breakout level that we need to watch is this level here, and the market is ways from breaking below this level. Now, if you take a look at the Nasdaq weekly chart from a 3-year perspective and draw the previous resistance line. So what happened here is, once we broke out above this line at the beginning of the year, the market has gone on a fantastic run. So we broke out here. We had a nice run for 2017. So we take that line and extend it. And you can see that we've come and tested this line once before for 2017 for the lows right there. Those lows held, the market went back to new highs. So in other words, what I'm saying here is, as long as the market is above this line, this market continues to be healthy. All pullbacks are healthy until such a time as when we break below this line. Below this line. That's why I'm saying the bears have a lot of work to do to truly break this market. The market right now is looking okay until we see more serious selling that goes on to break, for example, this line, or goes on to break the daily RSI lows line on the Nasdaq, which I drew earlier. So again, that line, until we can break this line here on the daily, this market continues to be sideways to bullish. If we take a look at the Nasdaq hourly, we can understand why the market bounced towards the end of Friday's session. On the hourly, this line here connecting RSI lows came in play. The market held that line exactly as you'd expect for a good market. That held. So until we break this line here, chances are this market continues to be able to bounce. Now at some point maybe we go on to break below the line. That would change the equation, but for now let's just take what we have in front of us, which is a market that came back to test the RSI lows line, and it held. The last time it had tested this line was here for this lows here from last month. There's also another way of looking at the lows of Friday's session, and is to go back to the previous resistance line somewhere here, and once we moved above that short-term breakout level here, or that line, see the market has had a nice response by advancing higher. So what we do, we take that information and draw a straight line, and anytime the market bounces back above this line, we know it's good for a bounce. So let's test that theory. We bounce on this line here for these short-term lows. We went to new highs. We come back, we go below the line, we recapture back above the line for this re-entry. We went back to new highs, and now we've come back as of Friday's lows. We tagged that line and we bounced again, suggesting that it would make sense now for the market to move to the upside, or at least to stabilize. At some point, should we break below those two lines, that's when we can expect a bigger correction to the downside. So right now the dailies, weeklies and hourlies are suggesting that the market is doing exactly what it needs to do to find support. Let's take a look at the Dow weekly. Now we can see that the Dow did manage to stay above and be positive for the week, and in fact we've now had 3 successful back-to-back positive weekly highs since the Dow broke out above the previous weekly closing high of 21,006.94, which goes back to this weekly closing high. So we broke out, market's been above that, closed even higher for the week. That's exactly what you want to see for any breakout instrument. So that's a good breakout. We can also see here that the RSI continues to hold above 69.1. That's a good stable market. So as long as the Dow is above this price, then the market is still bullish and could even see higher prices. Again, at some point, should we see a market break back below that price, then that would suggest that now the market is poised to pull back. With a failed breakout, you never know, things could get worse. But for now, that's a good quality breakout based on where it closed on Friday. Let's take a look at the Dow daily, and Friday's close was critical in determining where the market wants to go, because we finally made a new all-time daily closing high, which meant we went above the previous daily closing high. We were watching at 21,206.29, which is this daily closing, previous daily closing high. So we had a breakout at the end of the week. So as long as the market is above this price, that's a good indication of bullish momentum. And of course, we now know that if the market was to go on and crack back below that price, that might be actually a bearish signal. So either we stay above the price or the previous daily closing high, or we break down below it, and that would indicate where the market wants to go. Right now, since we are above that price, the Dow did close with a bullish tone, and expectation of higher prices only makes sense until we break back below this price. Also, it's important to note that on the monthly chart for the Dow, we continue seeing that the breakout continues to take place. The Dow continues to hold above 20,812.24, which is the previous monthly closing high. So as long as it is above this price also, the market should be stable to bullish. In other words, as long as it is breaking out on the monthly, the charts should be favorable to the bulls. We see here that the RSI continues to trade above 69.1, and again, as long as the markets are trading above 69.1 on the monthly, these are situations where markets are either sideways, you get shallow pullbacks, but ultimately you tend to make new highs. So with the Dow still above 69.1, let's not be too surprised if the market recovers and continues higher. And even for the Nasdaq, and this is the Nasdaq 5-year monthly, the Nasdaq continues to trade well above 69.1. That's why we can see that it still continues to be sideways, shallow pullbacks when we get pullbacks, and ultimately you tend to make new highs. So sideways to bullish market as long as the monthly RSI is above 69.1. To those of you who are new to this idea, here's a good example. I will show this example here. When the Nasdaq jumped above 69.1 sometime in, let's call it here, during that breakout, June, July of 2013, the market stayed above 69.1 on its monthly RSI and had a chance of this nice run. Of course, there were pullbacks, but they were shallow. Market recovered, would go on to record new highs. And it's only after it dropped back below 69.1, somewhere here, that ultimately we went down to sideways. So right now, as you can see, it is self-evident that as long as the Nasdaq is above 69.1, markets continue to be bullish, if anything sideways at worst, and bullish at best. Let's take a look at the S&P 500 weekly, and we can see that on the weekly for the SPX, we are still well above the previous weekly closing high. In fact, the breakout took place. We've had two back-to-back positive gains since that breakout, which is what you want to see for a quality breakout, because good breakouts tend to follow through. For example, take a look at this breakout here, where we had two back-to-back weekly gains after breaking out. Another breakout took place, and we can always gauge the quality because we can see we closed above it here and here. So follow through is another breakout here, and again we see two back-to-back positive weekly gains after breaking out. That's always an indication of intent. And so here we see the S&P 500 already confirmed this look with a two back-to-back positive gains after breaking out. So it looks good. And the price that it broke out, and as long as it is trading above 2399.29, it still continues to be on the breakout mode. Now, if we go on to break back below that price, then that is when we can start, believing that there is potential for more downside. Now, having said all that, we can see that this new high on the S&P 500 came with declining technical strength. As of right now, we also see that it is moved back below 69.1. And because of that, it does look like it could be the beginning of what could end up being a reason to go down, especially if it can continue lower. But this negative divergence plus rejection when trying to move above 69.1 is something to watch for. The more it starts recoiling from this level and confirming this look here, the more it might be suggesting that we can start expecting a pullback. Now let me go to the hourly. I want to discuss something on the hourly here. Now, something we see right off the bat, which was actually indication as to why the market was potentially going to pull back intraday, and I did discuss this with my subscribers, was yes, we were moving to new intraday highs early in the session on Friday, but take a look at this. There was an obvious negative divergence on the RSI, and of course we see the market did respond to that with this intraday pullback. But what happened is the market came back to test the previous breakout level, which is here. So again, we see we move above this blue line, which is this period somewhere here. We come here, we have double bottom support for the lows here, and as of Friday into the last hour, we bounced exactly on that line. So as long as this line is holding, the S&P 500 should be okay. Also, there's another way of looking at the same level, and it is going back to figure out this RSI movement here, which began right there with this move. Of course, the market's been higher since. We take that information and draw a straight line. which is right here. If the market bounces on this line with uniform action, you know it's due for a bounce. Now, you might not find this method in textbooks or anywhere else. Why? Because it is my own personal method that I developed over a couple of years. So check the description for a link describing this. And you can see we bounced with uniform action on that line. We came off the lows. So if you take those two lines, let's do them again. We got this line here, and also we got the previous breakout line. As long as markets are above these two lines, we can see that the market should be stable. At some point, if we go on to break below those two lines, then something has changed. But we go back to the main issue here, and it is on the monthly chart. As long as the S&P 500 is holding above 69.1, that's a sign of a strong and bullish market, where pullbacks tend to be very shallow and short-lived. Now let me go back to that Dow chart, discuss a couple things, and we go to the hourly. And this Dow hourly chart again shows exactly why we came off the highs. We made an improvement to all-time intraday highs, but that came at the expense of the RSI. In fact, the RSI was struggling to move above 61.8 during the intraday highs there, so a pullback just made sense. And so what we're going to do is let's draw the line that gave the market a resistance, so I can explain what I see here. So there's that line there, and there's obviously now another line right there, and the market has come back to test this line over the last 1 or 2 days, and that held, and we've hit that line twice on the top side, and that did find resistance. So we are stuck within this wedge. At some point, either we break out for a bullish move higher, or we break down for a bearish move lower. Now, good markets tend to bounce on the RSI 50 level. We know that from many of my videos. You can see here double bottom support around RSI 50 for the lows there, and even as of Friday we bounced around the RSI 50 level. Market recovered hour to hour as far as the Dow is concerned. You can also look at this using the uniformity method, and we see again that this was the previous resistance line. Once the market jumped above that line, this entry was somewhere here. Market has gone to new highs. Take that information, draw a simple straight line like that, and you can see we held this line for the lows there. We've held this line here for the recent lows here and here. Even that little support was for the lows there. So lots of things do show that the market is finding support where it needs to. Now let's take a look at the Dow hourly, which I looked at earlier, but now I want to look at it from a little bit of a bearish view, or potential for bearish possibility. And we have to go back to this break, which brought the Dow off those levels there. And again, check the description for this method. I call it the uniformity method, and you won't find it anywhere else, just because I'm the one who understands it. It's my own concept. But you can see that that line has been a problem for the Dow in terms of the RSI. We've been coming to this level and showing resistance on the Dow, and here we are either breaking out, so either this is the beginning of a breakout, or the market eventually coils back below that red line and ultimately starts some type of a pullback. So I guess it depends on whether we clear this line with some significance, or whether we are coming back and stall. We've been stalling around this level. I say more than likely, if we stall here, that's going to be suggesting a meaningful high here for the Dow. And we can see similar type of situation if you take a look at the Dow Transports. daily, and here a little bit more evident. And for the Dow Transports, you have to go back to this break. That was a warning break off the highs there. We take that information, draw the line, which is the uniformity resistance line. Every time you bump into this line and you are rejected with uniform action, that tends to be a reversal area. Uniform action rejection for the highs there. Double top, uniform action rejection for the highs there and there. Uniform action rejection for the ultimate daily closing highs for the Dow Transports, and looks like, as of right now, this is forming another double top. So if the Dow Transports are unable to move above that red line, chances are, with the resistance there, this is suggesting that the next meaningful direction for the Dow Transports and even potentially for the general market is lower. Keep in mind, if the market can clear that line, that's a good sign that the bulls are still having the intent of moving markets higher. Now, unlike the Dow, the S&P 500 actually failed to break out over the last couple of days. In fact, let me zoom in. This is 1 year daily. Let me zoom in so we can see it clearly. And here we have 3 months of daily data, and we can see that this is the current all-time daily closing high for the S&P 500. The level there is 2439.07. So we did spend some time above it, but we did not close above that price. So that's a failed breakout and a little bit of a knock on the S&P 500. If it can't break out, it's not a good sign. Also, we can watch this previous daily closing high where it broke out and has been holding above that level for guidance. And so this daily closing high, let me give you that number, is 2415.82. Going back to this daily closing high. So we broke out, we did test it. As of Friday, we held, which is good. Now, we know that if it comes back and tests this and breaks, that's going to be a bad sign for bulls. So this line definitely is one to watch, or that level. The market needs to defend this price. Anything below that is a sign of a market that is due for a major correction. And again, at the highs of Friday's session, those of us who are watching the S&P 500 30-minute chart were not surprised by the intraday pullback because of this line here. Negative divergence on the S&P 500. Also, we had come back to test the previous break. The break there was being tested, and once we failed to hold that on Friday, the pullback only made sense. So let me summarize this video. In conclusion here, let's go to the Dow hourly, and we are pretty much stuck in this wedge on the Dow. Bottom side support, top side resistance. Sometime maybe in the new week, a breakout here would be bullish and a breakdown here would be bearish. We have to wait for those signs. As always, for subscribers, be on the lookout for part 2 of this weekend's market analysis video, where I will discuss commodities like gold, crude oil, and also take a look at ETF and stock picks of interest. Otherwise, enjoy the rest of your weekend and be on the lookout for part 2 of this weekend's market analysis video, where I go into depth into sectors and commodities, stock picks, ETFs, and stuff like that. I am out for now. Peace and blessings. E-A-C-S.